Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special conversation. The focus will be on Zensar Technologies, the IT services firm that's reported its numbers for the fourth quarterly earnings. And we have seen a 1.8% year-on-year surge in its net profit to nearly 177 crores. What we've also seen is the revenue from the operations has increased by about 10.5% to 1,359 odd crore rupees. The EBITDA has grown by about 4.7% for the fourth quarter. It's now come in at 212.7 crores. The margins also have expanded to 15.7% in the reported quarter compared to 16.5% in the corresponding period of the last fiscal year. In fact, the company's also reported revenue of $156.8 million in the fourth quarter, marking a 0.9% sequential growth in the constant currency terms as well. What we've also seen is that the gross margins have also improved for the company. And for the full year FY25, the company has managed to post a revenue of $624.5 million, reflecting a year-on-year growth of over 5% in constant currency. Joining us to decode for us what has really gone in for this performance and what the outlook is for the company is joining a top management of the company, Mr. Manish Tandon, the CEO and the MD of Zensar Technologies, now with us on the program. Warm welcome to you, sir, and thank you so much for taking the time out. Congratulations on the steady set of numbers that you've posted. Has it met your expectations? Are in line with your expectations, sir?
No, my expectations are always much higher than the actuals, and that is the way we need to be. That aspiration should be high, and execution should be in line with the aspiration, and then we should see what the market finally delivers. So, yes, the numbers were excellent, but aspiration-wise, we want to do more.
Okay, do want to do more? Tell us, sir, then on the outlook front for FY26, first up, how is the demand scenario panning out amid the macroeconomic scenario that's emerging, a new world order? And how do you see FY26 vis-a-vis FY25 then?
I think it's too early. As you know, a lot of uncertainty has been introduced in the system as of March
Yeah.
of this year. And things are still playing out as we speak. Things are changing on a weekly, I would say almost on a daily basis.
Yes.
So it is too premature to comment on what FY26 holds for us or for anyone else. But I can say that as a management team, we have tried to position ourselves. We are very agile, we are very client focused, customer centric, and hence we have positioned ourselves to take advantage of any situation that emerges.
Sure. So, how are you looking at the discretionary spend and the client, plans at this point in time, sir? Have you heard anything in terms of any kind of indication of any delays in the spending?
So, what we started seeing was a little bit of right shifting of demand as we towards the end of the last quarter, right? So I mean, going into March, I was expecting X, and you know, end of March it was X minus say 1% or whatever. So that can be attributed to a little bit of right shifting of demand. Good news is that we are not seeing cancellation of projects.
Okay.
We are seeing a little bit of caution overall. And see, that's the problem, Sakshi, with uncertainty, right? You don't know. I mean, it's like a deer in the headlight. You don't know, and all our customers don't know what is coming down the pipe. So they are just being conservative at as this stage. But hopefully, over the next 90 days, things will evolve.
Okay, over the next 90 days, as things will evolve and we'll get to know till the deadline happens on the tariff front. Tell us, sir, when it comes to the deal momentum for this quarter, also you booked orders worth about $213.5 million this quarter. You have been posting, highest ever quarterly, orders as well. What does the deal pipeline from here on look like, sir, for you?
Again, it depends on, see, the deal pipeline is pipeline is a very large number, so you don't see the impact uh, so quickly. But order bookings are a more here and now number. At least this month's order booking, we are seeing them to be in line with what we have anticipated.
Hmm.
See, order booking margins. This thing is all about execution,
Yes.
and we are very committed to. As a management team, we are very committed to executing well, no matter what the environment is.
Right. So your EBITDA margins have again expanded to 15.6% this quarter. Tell us what has really led to that, and what are you looking at in terms of a band for FY26, the way you exit the year with, and in comparison to what we can expect there.
So essentially, we have always maintained that mid-teens margin,
Yeah.
and some analysts have asked me what does mid-teen margin mean, and I say that what mid-teens mean is I solve for 15%, and plus minus 1% will depend
Hmm.
on the market situations and so on.
Hmm.
I believe that if growth happens, then margins will not be under that much of pressure, given our cost structure and given our size.
Yes.
So that is what we are trying to do. As to the margins this quarter,
Hmm.
they were primarily because of good execution. I
Hmm.
think we have a great team in place, and especially we we don't overhire in anticipation of demand. We have switched to a more just-in-time hiring kind of a model. Our utilization
Okay.
is excellent,
Okay.
and that is the primary reason for the strength in margins.
Okay. Could you give us a little more color on FY26 hiring at Freshers Campus?
See, Sakshi, I find this question, at least 5 years old, because the talent situation in the industry has changed dramatically.
Okay.
We don't no longer have to go and take talent decisions 1 year in advance
Hmm.
and so on.
Hmm.
The labor markets for IT industry have been pretty post. I would say after the COVID boom, they have been pretty sanguine for us, which means that we can do just in time hiring. So rather than answer the question as to how many people we'll add, we look at more at demand and
Okay.
see. And if demand is there, then we will have to hire more and more people, primarily because our utilization levels are quite high.
Hmm. Also wanted to get in sense of, the wage hike scene. Some of your larger peers have already talked about how they may be postponing the wage hikes, looking at how scenarios develop. How are you looking at it, sir?
No, I think, see, first of all, I always believe that this is a very simple business. You take care of your clients and you take care of your employees, and everything else will be taken care of.
Hmm.
Uh, to answer your question, we have budgeted for a salary hike in time.
Okay.
The quantum of that salary hike will depend on how things play out in the next
Hmm.
1 or 2 months.
Hmm.
But at this stage, I don't have any intention of postponing salary hikes. The quantum might change, but we will not postpone salary hikes.
Okay. Let's talk about your verticals performance, sir. BFSI has grown by 3.4% sequentially this time. It's followed by telecom, media, technology segment. But manufacturing, and I think even in your healthcare segment, we have seen some kind of a decline. How are you really looking at that space, sir?
No, I think don't read too much into the sequential
Hmm.
numbers.
Okay.
See, again, BFSI, we are seeing strength.
Hmm.
I would say MCS also we are doing well, and the decline is primarily because we are coming off a blockbuster quarter in Q3 where we grew, I
Yes.
think, 6.5 or 7%. Similarly for healthcare life sciences, I mean, there is a budget there is a open enrollment flush that happens during the October December period. So again, it's not, I mean, and it was like 0.1, 0.2% or whatever. So I wouldn't read too much into it. We seem to be doing quite okay in that sector. And TMT, on the contrary, while the numbers may look good, it is primarily because, there are more furloughs in
Yes.
Q3 than
Yes.
in Q4. So I
Mm.
won't read too much into the sequential results overall, but I would say that we continue to be in a space where BFSI seems to be doing well. MCS and HLS will do okay, while TMT will remain under some stress for some time.
Okay. Another aspect that I wanted to discuss is, of course, Gen AI, the biggest buzzword in the entire tech space. You as well as all the other companies are also focusing big time into Gen AI. I wanted to understand, is it still early enough to call out, what kind of a contribution could you be looking into the top line coming in from your Gen AI? And what do you foresee over the next couple of years from this space in terms of meaningful contribution? How much of it can come from Gen AI?
And I think, see, first of all, what we are trying to measure at this stage is how much of our revenues are AI influenced. The new revenues that we are trying to get, how much of it is AI influenced? Because AI is, I mean, frankly, the industry has done a disservice to the technology by calling it artificial intelligence. I think it's a great tool, and the use cases on which this tool will be effective and can drive results for enterprises are still being worked out. We are already seeing some amount of uh, you know muted uh, thing on AI in terms of the data center investments that the big cloud providers were providing. So it's too early.
Hmm.
But from a Zensar perspective, what we are trying to do is make this technology real and to make this work for our clients and use it as efficiency and productivity tools to bring benefits to our customers. And that is where we are seeing a reasonable amount of success.
Okay. I just wanted to get a sense on your overall own milestone targets for your top line also, sir. Annualized basis, you're now doing about 625 billion dollars of the kind of revenues that you have. How long before we see that $1 billion target, sir?
If I would also like to see that $1 billion target, us hitting that $1 billion target sooner rather than later. It will depend on how the market evolves over the next few years, and it will also depend on if we can find some attractive assets that we can acquire and grow inorganically
Hmm.
in the space.
So, in any key sector space which is on radar, sir, for that inorganic opportunity?
Well, I think healthcare life sciences is one sector where we have just started. So we are on the lookout for good acquisitions.
Hmm.
But essentially, we are either looking at good logo acquisition, good client acquisitions, or depth in technology. So data, for example, data and analytics remains an area where we find interest. Some of the legacy areas like SAP also is an
Hmm.
area of interest for us. So it really depends. We are taking rather than take a very narrow view of things, we are trying to take a much more broad-based view of things and see how we can leverage our cash for the benefits of our shareholders.
Absolutely. Well, always a pleasure to listen to you, sir. And congratulations yet again for that steady set of numbers. All the very best for the upcoming quarters as well. Here's hoping that we catch up yet again to understand more about how the scenario is evolving. Like you pointed out, things are on a wait and watch mode, and nobody can really short say what's going to be coming ahead. Next 90 days will give us that clarity, and probably the next quarter that we meet you will be probably a better way to understand how FY26 could pan out for you. Thank you so much. It's been a pleasure speaking to you, sir.
Thank you. Thank you for having me, Sakshi.
Thank you. With that, viewers, we wrap up this very special conversation with Zensar Tech. I hope this has given you enough and more clarity as to how things are emerging on the IT sector front. But do stay tuned. A lot more for you to catch up on Business Today Television.
If you like the video, do like, comment, share and subscribe. If you like the video, do like, comment, share and subscribe.